Hey everyone, Andy Moss here, tradingadventures.com for your Saturday look at the weekly charts. If you're a newer subscriber around here, we do this every Saturday, and just to take a step back and look at the bigger picture of what's going on in the markets. You can always find the weekly charts on the homepage here at trading-adventures.com, and usually it will be pinned to my X profile as well. So if you lose it in your inbox, you always know where to see it. Sometimes it's a video, sometimes it's in written format, and the goal is always the same, just to look at another time frame, a bigger picture, a zoomed out lens, and get another view of what is happening in the markets. Last week, we were looking at some cautionary or potentially cautionary items in stocks. The S&P 500 or the SPY in this chart was below a trend line. It was below a 10-week moving average, and same with the Qs. And we saw a lot of potentially defensive moves as the Dow and the IWM held up okay, while the large caps were struggling, and defensive sectors such as bonds, such as commodities, such as the consumer staples and various things like that were attracting a lot of buying power and demand, while the more areas more commonly associated with risk on activity were struggling a bit. So it's really helpful, I think, to read these in sequence. If you take a moment each weekend to peruse the charts and get the gist of the commentary, it really, or my intention anyway, is that it just helps you stay in tune and maintain a feel for the developments in the marketplace and how things shift week to week. So with that being said, let's jump back in here and looking at SPY. You just heard me mention last week it was below a 10-week moving average. This week, largely due to the action on Friday, we've seen some pretty major improvement here. Now, it's not out of the woods yet, but it was nice to see buying come back in with some persistence and some steady strength there. So we now have SPY is back over a flat or slightly declining 10-week moving average here after holding this area for about the fourth test in a row. So we're still in a range. This range has been going on since it was first established back in October of 2025, and a couple excursions lower and a few brief attempts to get beyond this Fibonacci extension level, but so far nothing has held. So it's just more sideways action. Same with the Qs, a little bit of strength here, but still below a declining 4 and 10-week moving average. It did hold the anchored VWAP here from the June 2025 breakout. So that's support kind of where we expected. It's held up the last 3 weeks in a row. We got briefly below it this week, and prices came back fairly strongly, as we said. DIA, the Dow Jones 30, is holding this consolidation period after making a new high and briefly touching its Fibonacci extension level. So this is a bullish consolidation pattern in an uptrend as it holds the rising 4-week moving average. That's the faint gray line you can see moving through here. And so no big concerns there. RSI is not overheated. It's in a very healthy area. And volume was a little light. But keep in mind, we had a holiday shortened week with the President's Day market closure on Monday. Small caps continuing with their high level consolidation or bullish consolidation pattern. Call it a flag, call it a whatever you want. The result is the same. The price has been steady at a high level. It has not been able to break and hold new highs yet, but it's also not falling either. We've got an anchor off this recent dip. We've got an anchored VWAP from this recent dip. We've got a rising 10-week moving average. Volume is okay, and RSI is healthy. So no big concerns there on IWM as we see really across the board. It's just a time of digestion and consolidation while the market tries to figure out what it wants to do next. We cannot say the same for Bitcoin. This is a bearish consolidation pattern or a low-level consolidation. We see these 2 weeks are inside the action from this big week, which occurred on very, very heavy volume, and RSI is pretty oversold down here. So no positive developments there yet for Bitcoin, other than to say it's not going down as fast as it was. US dollar has been in an expanding range inside this area, and the big 2 week drop here back in mid to late January. It's trying to get a little bit of stability here, but you notice the size of the candles here for 3 weeks in a row. It's been moving in a wider range. It is above a declining 4 week, but the declining 10-week moving average is still acting as resistance now, with a declining 40-week not very far ahead. And just while I'm on this, as a reminder, 10 weeks is roughly equal to a 50-day moving average, and 40 weeks at 5 days in a week is roughly equal to a 200-day moving average. So that's why we have the 10 and the 40 week on there. Looking overseas at the all cap world index minus the United States, continued strength. And this is just a really beautiful continuation of an uptrend here on the international stocks as they continue to climb. RSI continues to be a little overbought, way up here nearing 80. It's at 78.62 to close the week, and volume backing off a little bit as it continues to climb. So not a major symptom, but just something to note there. And finally, the 4 week moving average here, very steeply rising. So digging a little further into the international names, China is still not going anywhere. It's below this trend. It's below the 4 and 10 week moving averages, and slightly back over a rising 40-week average. So potential support levels here in some price history from back in 2025 and late 2024, as well as a VWAP anchored from this dip back in April, and a Fibonacci retracement of 50%. And if I just scroll out here briefly, you can see that that's 50% of this high to this low is how that is drawn in. So that's what we see on China. Nothing breaking down too terribly, but not a lot of strength there yet either. Bonds, on the other hand, high level consolidation after last week's sizable upside move. Up here near the upper Bollinger Bands, which are pushing higher. The moving averages are all rising in sequence below here. And by in sequence, I mean the 4 week is above the 10 week, and the 10 week is above the 40 week. So they're all doing what they're supposed to do there on the aggregate bond index. The Treasury bonds, not quite as strong, but still holding up well, and back in this chop range with just, I've got a mess of stuff on the chart down here below on the Treasury bonds. High yield is continuing to trade kind of like stocks, which is what they're supposed to do. It's a riskier asset class and a little more growth oriented, even though it is a bond index, and still chopping around here. Just the range is getting a little more narrow. RSI is holding solidly above the 50% level, and volume bounces around just on either side of average there for the most part. So no major red flags on high yield bonds. Moving on to the commodity index fund. This is GSG, the iShares GSCI commodity index, and we see a resumption of strength here after this big move on high volume and then some consolidation on even higher volume. It's still holding a sharply rising 4 week moving average, and finally we watched this breakout for was it been years so far? We started highlighting this area back in 2022 as commodities just bounced around in this tightening range over a very long time frame. And when they finally got the breakout, which, as you can see, lots of false starts here, but once it held, it really got moving, and they're holding up very well so far. And beneath the surface of commodities, we see oil. Oil is finding buyers. The price is rising. It's over this little area of price history and above the moving averages. But notice, these are not in sequence. We've got a 4 week and then a 40 week and then a 10 week down here. So for this to really become an uptrend, a reversal to an uptrend, we need to see higher highs and higher lows above all the relative key moving averages, with preferably those stacked in sequence, meaning the 4 week above the 10-week above the 40-week. So we've still got a gap to close there on oil. Gold futures holding up very well. Got a little squirrely back here, as we noted, as that was happening, and back above the anchored VWAP from the high and holding up very well. Silver, a little more volatility perhaps, but still holding above the average. But here's the anchor off the highs. Here's a sharply declining 4-week moving average and a sharply rising 10-week moving average. So still a bit of a test area for silver here as we figure out if it wants to mount another move on beyond these highs, or perhaps to test these highs, or does this consolidation give way to further downside? We'll have to wait and see on that. It could go either direction at this time, but it is above moving averages with RSI in the bullish upper half and declining volume on this bit of a break here. Now we're going to look at a couple different views of the same overall market. RSP is the equal weight S&P 500. Just to give a little explanation there, if you're newer, the SPY is a capitalization weighted index. The bigger the company, the more of a position it represents in that portfolio or that index. The RSP is the same 500 stocks, roughly speaking, but they all get an equal vote. And when we look at this, we can see what are the smaller companies doing. And this shows they're behaving very well and participating in the up move, actually fueling a lot of the up move. If we look at the specific small cap indices or the IWM, Russell 2000, that corroborates that story, showing that the smaller companies have been very strong and attracting a lot of buying attention there. So that is the RSP. QQEW is the same approach with the NASDAQ 100 stocks. It is not showing the same kind of price action. The small cap or the smaller cap companies in the NASDAQ 100 have not been able to hold up and keep things moving in spite of the weakness in the Mag 7 names. So potential breakdown here as we're back below this area of price history from the previous couple of years. And this is a bearish consolidation. It's staying very very far down near the previous lows, with the moving averages coming down. RSI is in the lower half, and this looks susceptible to further downside as far as that chart goes. IWF is the growth index. It finds a little support here. This level we've been watching for a while, and the rising 40-week moving average right here. Bit of a topping pattern potentially, but we never know the top until after it's been established. But right now, this is a bounce in a medium-term downtrend, a bit of a cautionary event there on the growth index. The value index is just very strong. Uptrend continuation above the key moving averages, RSI, volume, all doing what they're supposed to. What we really want to see with these two is how do they behave relative to one another. This is a chart that we've been looking at for a long time with a specific emphasis on the RSI levels. And if I zoom the chart out, we notice that very often when the RSI has gotten to oversold or overbought levels, it has been an early indication of potential reversal in this relationship. So we saw some brief dips here, and then this one presented or produced a more meaningful top in this action. So, and notice here that usually the first instance of high RSI, maybe it just produces a pause, but when it happens up again in rapid succession, we get a little bit more of a meaningful reversal. So that's what we saw here again on this. And now we're looking at a deeply oversold RSI that has come back up a little bit as the price reversed and made a little bit of a turn here down at this level. And so if these tell us anything, what we might want to expect here is another push lower with another oversold RSI reading before we see a really meaningful turn in this relationship. Anything can happen. We're just pointing out patterns and possibilities here. I'm not going to assign a probability to the instance of that happening, but that's something we want to be on the lookout for. Oh, let me back up. XLY is the consumer discretionary index, and after weeks of some correction, it is finding support here at a rising 40-week moving average. So the RSI is still holding the middle pretty well. We've got declining 4 and 10-week moving averages up here. Would not be surprised to see a bounce in this relationship or in this index over the following 2 to 3 weeks. Looking at the staples, very strong action here that's now showing a potential reversal pattern up here. This is, you could call this a bearish engulfing candle if you need to assign a name to the potential pattern here. And all that means is that the high and low, opening high and closing low of this candle was outside the range of the previous candle. And that can mean more downside or further reversal ahead. We have moving averages rising steeply. We have a resolution of an overbought RSI, and we can look to see if this continues lower to confirm that pattern on Monday morning and into next week. The relationship is really the key. And if you think about it again, discretionary spending is generally things that happen when finances are good, the economy is good, people feel better about spending spending money on optional items, whereas the staples are the stuff that people have to keep buying no matter what's going on. So a potential reversal here could send us back up into first the declining 4-week moving average, and then maybe even back up into this area as it tries to take back some of the drastic sell-off here of a couple of weeks ago. We'll see how that develops. Another relative strength measure that I'll look at every week is the S&P high beta versus S&P low volatility. This is simply a gauge of risk on appetite. Is the buying power going more towards the more speculative, more growth-oriented names, or are they playing it safe? And so far, we continue to see a shift back towards safety, back towards lower volatility, and that doesn't really show any signs of reversing yet, even though we've got a little bit of a bounce here off of the lows. And the large cap, cap weighted versus equal weight, again, this is a bounce and a downtrend, nothing proven there yet. The cap weighted NASDAQ versus equal weighted NASDAQ, even though we saw this, I'll go back up just a second, even though this chart doesn't look fantastic, if you look at the relationship, you can clearly see that the equal weight index has been much stronger than the cap weighted index as this trend continues to go along. And again, all that tells us is that the smaller companies in the index are attracting some buying power and rising prices. And so I don't always put these in there. They are notable from time to time. This is just SPY versus QQQ. It looks like it's at a meaningful area here. Price came up. It's held there for 2 more weeks now, and maybe we see some reversal back down there, or it could be consolidation with a move higher. And the equal weight S&P versus the equal weight NASDAQ, just showing once again that the equal weight S&P has been a very strong group of stocks and continues to make progress higher here on an absolute basis and relative to a couple other comparisons. Last one for these is the U.S. stocks versus the rest of the world. The rest of the world has been very strong, as we already noted in the looking at the ACWX by itself. It's been very strong, and now we've got this DeMark 9 buy set up here. That is not a golden ticket. That's not a guarantee of anything. Just one notable piece of information. Maybe we see this sell-off catch a break and prices rise back toward favor of the SPY here in the coming weeks, but it's still a very strong downtrend here over the last 2-3 months, with the moving averages all declining in sequence there. So now we'll move into the home stretch here with a look at a couple of specific indices and the Mag 7 names before we take a look at breadth and participation, and then wrap it all up and try to see what are these charts telling us. If we put the whole picture together, what is our take on the market? where has it been, and what might we want to be on the lookout for in the next week and week after that. Semiconductors continue to be very strong, steady, strong uptrend here. Software on the other side of that continues to be very weak, low level or bearish consolidation here after the very strong 2 week move earlier in the year. Mag 7, notable event here as it touched the anchored VWAP from this low back in April of 25. You can see just really very precise touch of the orange line and came back up above the 40-week moving average. We've still got the declining 4-week, declining 10-week, and kind of a topping pattern potentially taking shape there on the Mag 7 names. Individually, kind of a mixed bag. Apple has been all over the place and trying to firm up here, but notice where it stopped, exactly at the declining 10-week moving average. Amazon, reversal, bullish engulfing pattern down here at some levels of previous price action. Maybe it's meaningful. Maybe it gets some continuation higher here. Maybe that's eventually proves to be the low for this sell-off. We just don't know until after it happens. But so far, that is a bounce in a downtrend, and we've got potential resistance levels up above in the declining moving averages. Google, that was the darling of the Mag 7 for a long time, and they sold off pretty hard after earnings. But it came down here, and here's that same anchored VWAP. No, not the same anchor. This was from the October low. And, kind of a trend area here, if you want to call it that. I put these on the charts for a reference point, but that is not a hard and fast rule. Nothing says price can't violate these areas. It's just another piece of the puzzle, but it is a strong bounce in Google here. It will have potential resistance next week at a declining 10-week, a declining 4-week, and the anchor from this dip here, all of those falling around 319 to 321. So that's a level we can keep an eye on next week in Google and see, does price stop there on its way up? Does it find resistance, or does it blow right on through and start moving back up into the upper half of the Bollinger Bands and testing recent highs again? Meta, chop. It's still stuck in this area and not really able to make much progress with an anchored VWAP and moving averages overhead. Microsoft has been incredibly weak, looks very similar to the software sector, which makes sense, and it's touching for the third week in a row. It didn't touch it last week, but this week it's back to this anchored volume weighted average price from the low of January 2023. It was able to hold that level and gather itself once before back in April in 2025. Can it do the same thing here? Again, I don't know. Right now, it looks like setting up for further downside. If it would lose the level of this week's dip, which was 392 and 32 cents, look out for more downside, potentially down into the 340, 350 range on Microsoft. NVIDIA has gone basically nowhere since July of 2025, and it has earnings on Wednesday. This week will be all about NVIDIA. What do they report? Are the results? What do they say about their projections for the next quarter and the next year? That will be a market driver. But just notice how, for being the favorite stock for so long, now it's just very flat. The moving averages are kind of tangled up here, going sideways on the 10 and 40 week. This anchor from the breakout back in June, flat, just a complete absence of a trend here on NVIDIA over a many month time frame. And then finally, Tesla. This is pretty orderly downward action here, as it is below the shorter term moving averages, but still holding the long term trend here with the rising 40 week. And not out of the woods yet, but this big range will likely, and we can just take this one out of here. If we consider the range defined by this high up here around 490 and these lows around 365 to 385, eventually that range will give way to further moves above or below. We just don't know, but the Bollinger Bands are flat. RSI is holding the mid-range here, and no resolution yet there for Tesla. So one more look beneath the surface here as we consider the percentage of S&P 500 stocks that are above a 50 and 200-day moving average. As the price action on the S&P holds up here and tests this 4-week moving average, or excuse me, 10-week moving average, which we already noted, we've got 65% of those stocks are above a 50-day moving average and 65% above a 200-day moving average. So most of the stocks, about 2/3, are participating in a strong uptrend there. That's a good sign. Bullish percent indices, as we this looks at the percentage of S&P 500 stocks that are on a point and figure buy signal, and it's a bit of consolidation and rest here in the confines of an uptrend. So it's above the bullish support line right here around 62% and improving there. The technical term on that is a bull confirmed status, and that's what we see on the SPX. Looking at the NASDAQ 100, it's improving after breaking down. It's coming back as we saw on the chart of the Qs by itself. We can look under the surface here and see that many of the names inside that index are improving and getting back on a point and figure buy signal relative to where it was, but we're still right in the 50% level and hasn't really gone anywhere for quite a few months there. And then finally, we'll consider the NYSE and more high level action on that. As it backed off a little bit, then it is holding up here pretty well and right along the upper confines of the range, telling us that a lot of stocks continue to participate there in the NYSE. So putting it all together, if we just go back to the SPY here, what we see this week is a moderation or a bit of a reduction in intensity of the potentially bearish signals and action we were seeing from last week. No overall resolution. We haven't seen any major trend reversals. We've seen more chop, bounces, or pullbacks from extreme levels in many names with still pretty healthy broad participation beneath the surface. So this is still a market that has me a little bit cautious. I think it is prudent to be aware of the potential for further downside, but we've got a lot of things just in really choppy areas, long-standing sideways consolidations as shown here on the SPY, and it really could go either way. So individually speaking, as far as trade setups and individual names, a lot of areas of the market continue to get hit really hard, like software. Small caps continue to be really strong, and capital flows where it's treated best. So the things that are behaving well and going up will likely continue to attract more buying power as the things that are weaker and going down continue to get reduced in portfolios there. So nothing that I see so far to indicate a major shift in that attitude or that relationship. And I think NVIDIA will have impact on that positioning this week. What do they, once again, what are their results? But more importantly, what do they project about the coming months and quarters ahead? What do they say about AI spending? How are their capital expenditures and all that kind of stuff? So there's what I see in the weekly charts for today, Saturday, February the 21st. I hope you find it helpful. Take a look, leave some comments. Let me know what charts you like, and let me know what questions you have. And we'll see how things set up in the next week and do it again next Saturday. Have a great rest of your weekend.